What is up, YouTube? What is going on today? We are back with another video. I had posted on my Instagram a couple days ago. Y'all asked me some questions for the next video, and I was probably gonna do market structure, but then somebody asked me, what is supply and demand? Like how do you trade it? How do you find it? So that's what we're gonna be doing today. I'm gonna be telling y'all what is supply and demand, how to find it, what you need to be looking for when you are trying to find supply and demand. Okay. So what is supply? Supply is aggressive selling. Okay. Demand. What is demand? Demand is aggressive buying. When you are looking for supply, you should see just aggressive selling. That's when you have like a big red candle or a couple red candles just dropping like that. All right. Demand's the same thing. You will see a couple blue or green candles just going up, shooting up, just going up. All right. So we can go ahead and get right into it. So let's let me delete all of this shit. All right. So looking at this, let me replay it. We got a big drop right here. Okay, this is supply. This is aggressive selling. You could look at this and be like, yeah, all right. You probably wouldn't even know what trading is and be like, okay, this is dropping hard. That's what you would think. This is supply. Okay. And then when you are looking for supply and demand, these are the three things. Okay. Remember these. These are the three things. The first thing, you want to see a break of structure, a break of market structure. Okay. The second thing, gaps in the market. Is there a gap attached to your supply or demand? Okay. Third, once it makes that gap and once it breaks market structure, you want to see it come back up or come back down to the zone, to the supply or demand zone. Okay. Those are the three things: break of structure, gap, retap of the zone. All right. So looking at this, we see the gap. Wait, no, we don't see the gap yet. I'm tripping. We see the break of structure. Okay. This is a market. This is a low. This is a low in the market. You can go to the line chart to see if you have trouble to find these highs and lows. So you have a low here, here's a high, here's a high, here's a high, here's a low, here's a low. So they're pretty easy to find. All right. So we got the break structure. Now as far as marking it up, you can find supply and demand on any time frame. You can find it on the 5 minute, 15. The 1 hour, the 4 hour, the daily, the weekly, the monthly, pretty much every single time frame. The 1 minute, the 3 minute, you can find it. Okay, it's there. All right. So I'm gonna go to the 1 hour. Okay, because the 1 hour and 5 minute, the way I trade, I only trade on the 5 minute and 1 hour. Sometimes I'll look at the 15 minute, but mainly the 5 minute and the 1 hour. The 5 minute for my entries, and then the 1 hour to determine what direction the market is going, whether it's going up or whether it's going down. Okay. So looking at this, I know it's an uptrend. Just looking at market structure, we have a low here. There's a higher low. We have two highs here, but then it breaks above and breaks these two highs, and then you have a higher low right here. This low is higher than these lows, obviously, and then you have a higher high. This high is higher than that high, and this high is higher than this high. Okay. So we can go back. No, we're not going back yet. My bad. So looking at this, we have a 1 hour supply. This is a 1 hour supply right here. All right, it's the same thing. We got the break of structure. It broke all of these lows right here. Okay, and we have this big momentum candle. And now with the 1 hour supply, with the 1 hour setups period, when you are getting in the trade, you can go for more than a 1-to-1 RR. That's what I go for. I'll go for 1-to-1s only on 5 minute only setups. Like with setups that don't have a higher time frame confluence like this is a 1 hour supply that it's gonna come back to. So once it comes back to it, I'm gonna get in. I'm gonna be looking for a bigger gain on the trade because it's a higher time frame confluence. With 5 minute setups and 15 minute setups, it won't run as often. With those setups, you'll probably get like only a 1-to-1, or maybe a 1-to-2, maybe 1-to-3. With setups like this, you can get like a 1-to-4 or 1-to-5. So We understand that we have the 1 hour supply here. Now I'm gonna go back to the 5 minute, and I'm gonna see if I can find a 5 minute setup within this 1 hour zone. So I'm just gonna take the line right here, and I'm gonna mark up that 5 minute zone. This is a 5 minute zone, okay, that we marked up before. It broke this low and dropped. So now and then sometimes I'll put it right here. I'll put it at the third candle, because sometimes, my bad, sometimes when you have a zone marked up, it won't always hit that first candle. Sometimes it'll hit the second candle or the third candle. So when you're looking for a 5 minute setup or 15 minute setup, and it retaps the zone, sometimes if you only have that first candle marked up, it won't hit that first candle. It might react off of the second or the third candle. So I'm gonna just get that line right there. So fast forward. Now we can identify the gap. This is the gap in the market. You have the gap from here to basically there. Like, it has to fill in all of this. Okay, this is a big gap. This is just money sitting here. It has to fill this in. The more you trade, you'll understand that the market must repeat what it has done before in the past. Okay, when you have gaps or when you have highs and lows, the market is going to come back to those gaps. It's going to come back to those highs and lows. Okay, if not right then and there, it's going to do it at some point within time. All right. So let's go ahead and keep looking. Let's go ahead and fast forward. Ooh, and looking at this too. Yep, this is a demand setup. We can go ahead and mark this up. And like I said before, you can use the first candle, second, or the third, maybe the fourth. For this setup, I'm just gonna do two. I'm just gonna do 2 candlesticks. Okay. Now me looking at this, hold on. You see how this didn't tap my zone? Where did it tap? It tapped up here. It tapped that fourth candle, and this is perfectly fine. Okay, it still has to fill in that gap. And like looking at this, if this was to drop, let's see if it drops more. Wait, but first, my bad, I'm tripping, y'all. I'm tripping. So yeah, like this, it can drop even further and hit the second candle or the first candle. So having a zone this big is perfectly fine. Now, like having a zone like up here, like that's too much. But we can go ahead and leave that right here. So this is a demand setup. So we have the breaker structure. This is the high. It broke this high right here. Okay, broke structure. If we go back, this is the gap. This is the gap from here to here, and then the gap is still down here to within the zone. Okay, that's the gap. It has to fill that in. If we fast forward, we're waiting for the tap now. Okay, we're waiting for it to come back to the zone. Let's see if it tapped, because sometimes the market be on some BS. It didn't tap. It didn't tap yet. Okay, I had to realign it. It didn't tap. I'll put it a little bit too high. Let's see. Now we got the tap. Okay, so now we got the tap. Now this is only a 5 minute setup. If you go to the 1 hour, right, there isn't a higher time frame confluence. Okay, the only higher time frame confluence that we have is that there's a 1 hour supply above, which it could be headed to right now. So I'm gonna go back on the 5 minute. Okay, and since we have this break of structure, whenever you have a break of structure, it doesn't matter what time frame it is. It's just that break of structure indicates that the trade actually still could run for longer, or it could be headed up to a supply, which it could be. All right, so now as far as entry point, we got the tap. So I'm gonna be looking to get into the trade, right? So my entry would be at the break of a candle. I want to see it break this high. Okay, I need to see, for me to get in, I need to see a break of the candle high. And then my stop loss is always going to be at the low of the candle. If you want to be safe, you can give it a little bit of space. For me, I don't really care. I just put it at the low of the candle. So now let's see what it does. Okay, if this was a live market situation, I would be getting in right here. This would be my entry point. See what it does. All right, it broke above. Hold on, let me delete that. It broke above, right? And what is it doing? This is why it's important to understand gaps. it's filling in this gap right now. This big 1 hour gap. It's filling in this gap currently while we're in the trade. Okay, so now it hit my 1-to-1 RR. Okay, it hit my 1-to-1. So whenever a trade for me hits my 1-to-1, what I'll do, I'll put my stop loss at break even, and I'll start taking partials. So I'll take like a profit of half the trade, but still actually be in the trade. So I'll take partials, and then I'll adjust my mental take profit all the way up to here. And what I mean by mental take profit is I won't actually put my take profit. Why is it? Hold on. Okay, I won't actually put my take profit in the system. What I'll do is I'll just have a mental take profit, and it'll hit a certain point, and I'll be like, okay, it hit my TP. I'll get out manually. I'll get out now. Or it'll hit my first TP, and then like in this situation, it hit my first TP, right? So what I'll do is I'll adjust it. I'll adjust it on TradingView to just be at a certain point, and then I'll put it in the system, because I'll be like, okay, I'll get out at this point and be done. That's why you can't be greedy, because some people, they'll see this, they'll see all of this and be like, oh yeah, it's shooting up, I'm gonna stay in, and then they'll see it come down and be like, damn, I just lost, and then they'll be mad. So now and that, like, this is what I like about supply and demand, because you can take a demand or a supply like this demand, you could take this demand and ride it up to that 1 hour supply. Same thing with a supply too. You could take a supply and you can ride it down to a demand. You know, it's that's why I like this strategy, because it's huge on reversals. So now we're waiting for the tap. Okay, we would be out this buy. We're done. This demand is done. It hit our TP up here. We're done. So now we are at the 1 hour supply. Okay, and then look, we have gaps here, and we have a gap here that has to be filled, and we also have a gap here, and we have lows. The 2 lows. Okay, we got our tap. Let's see what it does. Okay, still in the zone. All right, now this is what happened. Look what happened. It broke these 2 candlestick lows. So my entry now, I'd be waiting for it to break the next low of the candle. Stop loss at the top of the last wick. Or adjust my TP to a 1-to-1. See, 1-to-1. Now let's see what happens. It breaks it. We're in the trade. Alright, hit our 1-to-1. Adjust my stop loss to break even. So if the trade turns against me, I'm still, I'm okay. I haven't lost any money. And what did it do? It filled in this gap, and as far as take profit, that's why it's important for you to understand market structure, because you can use lows and highs for targets as your take profit. So I'm gonna be targeting this low down here, and then I'll put a horizontal line here just to tell me that this is a low. I'm gonna see it targeting for sure, and this is where I'll take partials at, okay, and still be in the trade. So let's see what it does. Hit that. This is where I'll be taking partials. My next TP is down here. See what it does. There you go. Now we're done for the day. That's it. We up, we green. It's pretty simple. Okay, it's pretty simple, guys. But yeah, that's pretty much it. So when trying to find supply and demand, look for a break of structure, gaps in the market, and then you want to see it tap your zone to then fill in those gaps, okay, to then shoot up or go down. All right, I'm gonna say it one more time. Break of structure, gaps in the market, and retap of the zone. Okay, it is not that hard. Now I'm not saying this strategy works 100% of the time. Okay, no strategy is gonna work 100% of the time. You will lose. Okay, you will lose. I'm not about to sit here and guarantee that you're gonna win every single fucking trade. You will lose. Okay. And trading is not for everybody. If you can't accept the fact that you're gonna lose, you will not be successful in this industry. Okay. What else? I'll probably make another video on market structure, because that is very important. I want to put some emphasis on that as well. But yeah, that's pretty much it. Just keep your strategy real simple. And then if you don't want to use a strategy, that's fine. you can apply whatever I have from this to your strategy, whether your strategy consists of M's and W's or psychological levels, supporting resistance, whatever it is. Okay. But yeah, that's pretty much it. Let me know whatever questions y'all have. Let me know if you guys understood this video. If not, I can clarify anything for you. DM me, put some questions in the comment section. Other than that, that's pretty much it. Stay consistent, y'all. Keep it simple, and you guys have a good one.